All right. Welcome back to the Brutally Honest Loan Officer podcast. I am Derek Brown. As always, I'm here with my co-host, Stephen. Stephen, say hi.
Hello, hello, hello. Another great
All right.
episode.
Yeah, today's episode is going to be a hot topic.
Oh,
It's what's on everyone's mind. It's what half of our commercials are about right now. The upcoming presidential election. Um, I know a lot of people are nervous about it or feel a certain way. So we're going to discuss it a little bit, but more so pertaining to uh, mortgages and like real estate side of things, home buyers, stuff like that.
so you're
So
gonna tell me who to vote for?
I am not going to tell
All
you who
right.
to vote for. I'd never tell you who to vote for, but we do have some stats about our current market leading up to the election, and possibly why it might be a good time for like current potential buyers to
Before
consider
we
buying right
we
now.
were we were talking about before on here, like we're gonna have a new president, one way or the other, no matter
Correct.
who gets it. It's a new president. Biden's not staying. So I mean, things are going to get shaken up. How much one way or the other on there? So, but let's
Correct.
let's hear these stats. What are we looking at on these stats?
All right. So, 23% of buyers who are likely to purchase their first home in the next year said they are waiting until after the election.
So I could definitely attest to that because
You're a lead
everybody,
tracker.
yeah, everybody knows that that we're in coaching and that we track all our leads and track all our conversations and everything, and it is down. It is down 2/3 down. Like I think you have like 1/3 of
Yeah,
the leads. I think
I should go
it's
back and
down.
look at last year. Because I know we slow down during the holidays. And that's typical, but things have gone like my leads have gone way down
Yeah.
in the past few weeks. So I don't know. This survey came from Redfin. It kind of gives some insight as to why that might be. But yeah, so according to a Redfin commission survey conducted by Ipsos in September 2024, the survey was fielded to 1,800 US homeowners and renters age 18 to 65. Report focuses on 491 respondents who indicated they will purchase their first home in the next year. We asked why not now or before then. So this is a very small pool, but ones that they asked, here are some stats. So 30% of the respondents said, I am currently on track in my financial savings to purchase a home in the next year, just not right now. Okay. So you're saving, you're not there yet.
I'm not surprised by that number. I'm not, yeah, you got money saved and you're currently keep saving now. Could be
Right.
affordability, like house
Yeah.
prices keep going up, so they're just trying to catch up to it. So, all right,
Right. Next stat, kind of the same thing, 28%. The timing works better for me and my partner or family. So in the future, works better than right now. That
makes
could
sense.
be what we talked about with holidays. We don't
Yeah.
want to move during Thanksgiving and Christmas and stuff like that. Get it. Okay. 26%. I am waiting to see if Harris's housing plan goes into effect, which includes providing 25,000 in down payment assistance for certain first-time homebuyers upon her election.
Do certain first time. What are the first? What's the certain?
We don't know yet.
So we don't know. All right. Well, let's
And we don't know
address
how
this
long
one.
it would take. Like, I don't think that election happens if Kamala Harris
Yeah.
gets voted in 3 days later, first time homebuyer program is sent out.
Well,
I
listen,
don't,
we have a first time home buyer program in Florida that could give up to gives up to 35,000. I mean, it only has so many funds and it does run out every year.
right.
I would like to know what the certain first time home buyers are on it. Like, what are they
I'll
including
be
on that?
very curious to
Yeah.
also see because how much money would go into that program. So a hundred
Where's that
million
money?
dollars. If you
Where's the
think
money
about
coming
Florida
from?
housing, they got $100 million for hometown heroes. That was gone in 59 days,
Yeah.
right? And now
For the
they've
last
had
two
some
years.
like
The last 2 years it was like that.
yeah, it was like 60 days last year, 59 days this year. So it's for first time home buyers and $100 million gone in 60 days or less. Now we've had some fallout funds. So somebody that didn't close, or if that mortgage got paid off and the money got refunded to the program, then we've had some fallout funds that released, we've been able to continue doing Hometown Heroes, um, over the last couple of months, even though they say the funds ran out.
What I
But
don't like is some people say like, oh, if you give every first time home buyer $25,000, because we said 30% of them are trying to save enough money. So suddenly they had another $25,000. Will that help the affordability issue? And I don't think it will, because what will happen is now you have a lot more buyers on the market that can suddenly buy this place. So what happens then? You start having
prices go
supply and
up.
demand. Yeah, so prices start going back up. So I think I would like to see what the certain first time home buyers is, but if you just give it to everybody, then it's definitely going to have
Right.
the
And
reverse
what's the
effect.
repayment like? Is there an
Yep.
interest rate? Like Hometown Heroes is awesome because there's 0% interest. If you borrowed 15,000 in 10 years, if you haven't paid any of it back, you owe 15,000. So if you sell your house, you're going to pay that back. So those programs are also like more so designed for first time home buyers, obviously, but for somebody planning to live in the house for a few years.
Yeah. And I will say there's 25,000 in down payment assistance. There are already programs out there nationwide that do this already.
Correct.
That may, so unless they're going to make a lower rate on it or a grant, which I doubt it, but like this program's already out there.
Yeah. So next stat, 23%. I am waiting to see if my city or state will push for more affordable housing initiatives.
I mean, like Florida, this is you have the political party in Florida, the PAC, the Realtor Political Action Committee, right? I guess what it's called, but RPAC that pushes for affordable housing. I mean, they're ones that help get the hometown heroes
Right.
available for people. But like they've been pushing affordability. The thing is on affordability, at least here in Florida, is in South Florida is the insurance. Like that's the number one killer. Like yeah, you got the taxes and taxes go up because as long as property values keep going up, your tax bill will go up on the next purchase. So that hurts, but I think the biggest killer, and I'm starting to see it in other parts of the country too, that it is insurance. So it's like even how insurance is a huge silent killer on deals,
Right.
make things more affordable.
Yeah. I have a customer right now that I'm trying to help. She's been a client for years now. But she bought like an awesome home on an island in Grant, Valcaria, Florida,
Mhm.
and insurance canceled her because they don't want to take on the risk of an island home. And it's crazy because she's reached out to several other, insurance companies and they don't want to take it. Like, so we've got to get a new inspection report and do all this, work in order to simply just get insurance
Yeah.
so that she has insurance on the home.
And with the
So
two hurricanes that came through, I mean, one just through Florida and the other one that kind of went up to North Carolina and, destroyed a lot up there, like insurance are going to pay their claims. So guess what? That means their premiums are going to go up, throughout
right,
the nation now with that.
correct,
So, I mean, the affordability, I keep telling you, maybe if they did a incentive to builders to build starter homes, like that would be the only way to really get affordable housing back out there.
right.
Lowering insurance, maybe taxes, of course, rates. But if you lower rates, then you bring more buyers, which then starts raising it up again.
Home prices go
Um,
up.
but yeah, so if things do get more affordable, all that means is just more people can buy it, and the demand kicks in again. I mean, it's simple supply and demand. We just don't have enough houses on the market, and that's from because of the '08 crash
Right.
of that market. Like builders stopped building for several years, like nationwide. Like I just actually had a client that we're doing a loan on that she just got rid of the land she bought right before the '08 crash when everything was skyrocketed. She bought it for like 180 and had to sell it for like 30 grand. What that's 16 years
Huge
later.
loss. Yeah.
Like you're still seeing people dealing with that stuff. So yeah, it's just there's not enough homes out there to make everything affordable. So it's really got to go to the builders to try to make stuff more affordable.
Right. Um, Next stat, 23%. I'm waiting until after the presidential election to see how the economy is doing before I purchase a home.
Out
Okay.
of all
That
these,
sounds
that's the
like
only one.
scarcity mentality, but
Yeah, that one, I get it, makes sense. But the economy, it's slow moving. So it's not like a president's going to come in and it's just going to change overnight. Like they can implement things to get things to start kicking off. I
Right.
mean, like when Trump came in, he changed a lot of regulations and stuff, and it kickstarted the economy and went. So you can definitely that can happen, but if you even if you look at that, it still took a while before it kicked off, kind of thing.
Right.
So it's not like it's going to be like you said before. Like it's not like somebody's going to get elected and when they get sweared in, like in early January, that they're suddenly going to be, um, the next day things changing. So it doesn't
Right.
happen that not that quickly.
Yeah, exactly. 18%. I'm waiting for the Federal Reserve to cut interest rates in the next year, which in turn should lower mortgage rates. So, well,
You-
this answer is loaded
It is loaded.
because the last Fed meeting, they cut interest rates by 50 basis points. They cut their Fed funds rate by 50 basis points.
Yep.
Leading up to that, mortgage interest rates were going down in line with them making that cut. But since that meeting, do you know what has happened to mortgage interest rates?
They have gone up, up, and up.
They have. They've gone up every single week since.
Yep.
There are several other factors. Jobs report, they're saying the economy is stronger than they thought. So even though the Fed cut their Fed funds rate, mortgage interest rates have gone up.
I
So
think
if you're sitting on the
historically,
sidelines right now, waiting for the Federal Reserve to cut their interest rate so that that will in turn lower mortgage rates, you might be sadly mistaken.
and I think historically, when the Fed cuts the rate, their Fed rate, what usually happens is people pull money from the stock market and put it into the bond market, which would actually make mortgage rates go up. And people don't realize that part. Like that's just where it kind of sits at. So even though like this was supposed to have, everybody was kind of predicting that, hey, the Fed starts cutting that rate, that mortgage rates would come down, and they did for a little bit. But then other reports came out and said, hey, the economy's still booming.
Right.
Job wise, the job report, we have to see what happens if they change those numbers. So if
Well, and then inflation report came out stating that inflation wasn't going down the way they wanted.
yep.
So if inflation is going up again, you can expect mortgage interest rates to go up. So there's a lot of different factors that go into that. So if that's your only reason, you might want to do a little more research. And ultimately, if you were to buy now and then interest rates go down, you should be able to refinance.
Yeah.
Now, I'm not saying that everybody will be able to. A lot of different factors, depend on that. If you're putting a very little amount down, if you're taking advantage of down payment assistance programs, you might have to wait longer to refinance. But for the most part, if you purchase and then interest rates come down, we should hopefully be able to lower your interest rate then. If those interest rates do come down and you've waited and then you want to go and purchase that home, like Stephen said, if demand is up, that purchase price is more likely going to be higher for the same property if interest rates are lower. That's
Yeah,
simple supply and demand.
exactly. Like it's just going to be up there. It's and I want people to think, as we haven't really hit on this too much, is the I have a really low interest rate and I'm getting all of these letters to refinance. And they're like, oh, we can promise you this rate or whatever rate. I've just had a client that they are showing her a rate in the fours. Rates are in the sixes,
Right.
maybe fives, but you're paying
And
for
then
it.
with bad credit, if you're conventional loan, maybe sevens.
Yeah. So if you just think rates are in the sixes, if you're getting a letter to refinance and it's telling you below sixes, you got to look at that fine print. I just had a customer like, oh, right, they can give me a four something, and we looked at it, and they were paying $37,000 in points to get that rate. That is ridiculous. They were going to add it onto that person's loan. Hopefully, that they only see the rate and be able to, hey, oh, I've got a lower rate, so I'm better off. No, you're not. You're still paying for it. So you
Right.
still have to make sure you're reading that fine print. We're happy to look over anybody's stuff that they get to just, hey, there is a target rate or what is a strike rate that, hey, when it's this, that's when you make
we hit
sense
the
to
go button.
refinance.
Yeah. Yeah, there's so much crap going out there. I can't even log in and make a mortgage payment without my company telling me that I should refinance or take equity out. For some people, don't get me wrong, a cash out refinance is a fantastic way to consolidate debt. And sometimes the the math makes sense.
Yeah.
Comes down to numbers. If you're able to eliminate some other debt, taking on a little bit more debt on your mortgage can be beneficial. Yes. But everybody is different. So, that depends on so many different factors. That's where you want to reach out to a loan officer, run the numbers, compare, what this would look like. You can compare it to a HELOC. Don't ever do a home equity agreement. Stephen, have you heard of the home equity agreements?
No.
Yeah. So there's no income qualification, there's no credit score requirement. You basically sign over a portion of your equity and they give you however much money. So let's just say we'll give you $50,000, but we're going to take 15% of your equity. And then as your home appreciates, what they let you borrow, you are then getting less back. If you were to sell later, you're going to have to pay them back and even more than what you initially agreed to. It's super misleading. Home equity agreements, bad. Don't do it. All right, next step. 18% said they are waiting to see if the federal government enacts affordable housing initiatives. And then 15.9%, I'm waiting to see how Trump will tackle issues with affordable housing upon his reelection. I mean, that one, and then
There's
so that's
three of them.
now. Three
Three
that
or
are
four
talking
of
about
them, yeah.
affordable housing.
Yeah.
So I really wish that I could reach out to these people and ask specifically, what do you mean by affordable housing? Are you saying the house is not affordable because of the payment? Is that because of insurance? Is that because of interest rates? Is that because of the purchase price, what the home is worth? So there's so many different things that, can make something unaffordable. Or is it because you've got other debt elsewhere, so you just simply can't afford to make the payment, regardless of
Yeah.
that. So, and I think that's one of our biggest issues is consumer debt right now. It's crazy.
Yeah. Oh yeah. Credit cards are at an all-time high. All that stuff is high.
Yeah. And those interest rates are 20 to 30%.
Yeah. It's ridiculous.
And yet I get yelled at for 6%. Really? Get out of here. 14%. I am expecting a specific home to go on the market. Okay. Totally understand. You're waiting for the right
That's
house.
the only one that makes sense so far.
12% applied for assistance from the government, and I'm waiting to hear back.
That's really weird. That's weird.
Yeah.
Because it should be like a one business day turnaround.
Well, I guess it depends on the program of what they're trying to do.
Yeah.
I know that the assistance programs that Stephen and I are ones that we can originate, like our own company or whatever, and then we send to the specific investor that allows for assistance. So through Florida Housing, we're approved. We're an approved lender with Florida Housing. We've gone through the training. Each loan officer has to be approved. So we've gone through that, and they allow us to originate it, and we sell the loan to them.
Yeah.
To their servicer. So it makes it a lot smoother for us, a lot smoother for the buyer, not a bunch of special hoops to jump through in order to get, the assistance. So this is nationwide, so I'm not sure exactly what this.
And we have a
percentage
nationwide lender too to do it. It's just
not as
things.
pretty.
Yeah, they're just not they're not as good. It's a higher rate. You got to think unless it's coming through the state, a lot of down payment assistance has a higher rate with it. And then we have a lot of the counties that will do grants, which is great. Like I have one person in Broward County doing a grant, and depending on which city she buys in, it's how much she can get.
Right.
So she just has to make that determination. But it really wasn't a long I mean, it took her to get approved. It didn't take that. I mean, because you can look at we always just pull up what the qualifications are and be like, yeah, you would qualify for this. You might have to go take their class. That's 4 or 5 hour class you got to go sit in. Like whenever the next one's scheduled, that's when you go. So if you're just waiting for somebody to get back to you, seems if it's been more than technically I would say 2 business days, that's a red flag to me.
Right.
They should be able to tell you like, yeah, you're going to qualify for it. Now you might have, okay, if you're waiting to a certain date to go to a class, that's different. But if you just haven't, you don't even know if you might qualify or not, then that's a red flag. going all of this, the biggest thing, as we said, there's going to be a new president. So that means the market either might, okay, if Harris gets in, is she going to be the same like Biden? Does the market really think that if Trump gets in, is he going to go back to how he was, or is he going to change things? But there's going to be a new person technically in charge. The
Right.
markets like stability. So
Correct.
elections are going to shake that up. Whether it's the stock market, interest rates that we see moving, consumer confidence, all that is changing. Businesses might hold off on making more big decisions until they know who's in charge and what policies might be put in place. But for us in the mortgage world, we keep an eye on interest rates. So because if any policy changes that happen could kind of happen quickly with that part of it.
Right.
Maybe they start trying to get the
Some
Fed to
things
lower
will
the
probably
rate.
happen quickly. Some things are
Yeah.
going to take time. There's going to be a lot of volatility. You're going to see some things go up and down, up and down. I remember, I think it was when Trump got elected. I had a friend that owned quite a few shares of Tesla stock, and they started to go down the moment Trump was elected. So this person sold all their Tesla stock. And then it slowly went right back up, and then a couple years later it was worth a ton.
Yeah.
So they impulsive move cost them some money. So I don't know if you should be impulsive. We're gonna have a lot of volatility in the next few weeks. We got 2 weeks. 2 weeks. So
2 weeks.
if you do not know who you're voting for, go do some research. Go find out what policies you care about and what policies are, being whatever Trump is planning or whatever Kamala Harris is planning, whatever side you agree with, whatever changes you want to see made, make sure you vote. You can make a difference, but only if you vote.
Yep.
So that's my last piece of advice. Go vote. But that's it. Thanks for joining us this week. And we'll see you next week. This is the Brutally Honest Loan Officer Podcast. See ya.